Hi, we'll be discussing what a petty cash fund is. But first, what is cash? Cash is a legal tender that can be used for goods, debt, and services. In accounting, cash is liquid and therefore the hardest to control. Every note has a serial number, but we cannot spend time trying to identify each note. There are two methods for internal control of cash. First is bank reconciliation, and what we will be talking about, the petty cash fund. Petty cash fund is the amount of cash kept on hand for any sort of minor expenditures. Vary in size and scope. However, all petty cash funds follow three activities. First is the establishment of the fund. The second is making payments to the fund. The third is the replenishment of the fund. Here are the relevant journal entries for establishing a petty cash fund. The first being petty cash on debit for 100 and cash on credit for 100, although I only have a 5. Then we move on to making payments from the fund. Cash can be taken to make payments, and employees can seek reimbursement if it comes out of their own pocket. They must bring back the form and the receipt of what they spent it on. Now finally on to replenishing the fund. It is done by counting the remaining cash in the fund, the receipts that were collected, and then cashing a check. This is the petty cash fund report. You started out with 100, and there was only $15 remaining in the fund. The cash requested to replenish the fund is 85, and here are all the receipts in the fund. And this is the journal entry to replenish the fund. Counting from the receipts, it is now put into expenses, and cash is credited again to be withdrawn. But it is important to keep in mind that the petty cash fund that was established and spent on might not always match up. And we can't really keep in track of all these disappearances or just extra change in there. But we can make a new journal entry. Cash short and over is a temporary account that can either be debit or credit, meaning there's more or less than what is expected. As you can see in this petty cash fund replenishment report, the starting petty cash fund was 100, its remaining was $13, and the cash requested to replenish the fund is 87. But the receipts only lead up to 85, so that means there are $2 missing. The journal entry is as same as before, but now there is an additional account called cash short and over, as there was $2 that was unreported in the missing cash, in order to warrant the withdrawal of $87 from the cash account into the petty cash fund to replenish it. Thank you for watching this, and every single student in accounting recommends you do the screencast.